Welcome back, everyone, to the program. I am your host, as always, Jeff, and we're here with the economic preppers. We got Patrick, we got Dylan. Patrick, how you doing this day?
Good. I'm out of jail like Trump, not arrested.
Always good, always good. Dylan, how you doing?
Fantastic.
Well, we got a ton of stuff to cover this week. We're probably going to spend a lot. We'll do the normal topics, of course. We've got lots of history. We've got lots of things about the dollar. We got lots of things about the global things that are going on. So let's just jump right into it with our first story. And the first one, I think everybody is talking about. We're not going to talk about much about this. We want to get this off of our plate because there's so many other things. This has been covered and beaten up everywhere. New York, Trump, Alvin Bragg. Dylan, what's your viewpoint on this whole thing?
Gosh, it's just more political theater. I think it's if there's a strategy behind this, we kind of talked about this last week, but there's a strategy behind it. I don't think it's a very good strategy. I think this is giving any of our enemies or even allies who are looking at America, it's giving them pause to when they look at us and see how we're operating, how we're doing things. I don't think it's good. I don't think it's a good look all around. Like, it's just bad. And if it's true, like if this is actually like a real thing that's being pursued, that's a really bad look to see any sort of party or any sort of individual trying to throw their political enemies or opponents into jail. It's just not good.
No, it's not. Patrick, you want to add to that?
Nope, I don't want to give this one any more airtime than it does. I think this is a distraction. To me, it's pretty simple. Like, there's going to be so many ways this thing is going to be ripped apart. I'm just waiting for that to happen. But the reality is, like, what's happening other than this Alvin Bragg felony hunt that he's going for with Trump. I'm done with it. It's been a long time over.
Yeah, I agree. This is much ado about nothing. This is a distraction, and we really don't want to give it much more airtime. But it also is going to set a precedent, which may come back and hurt the very people that are trying to get the guy in the first place. So we can move on from that. Let's go to our next story, which will probably be much more interesting. So that next one is about. I'm catching up too. The guys. I'll give you a little background. We have a worksheet. Everybody puts stuff in. Not all of us get to see everything until we sit down and talk, which sometimes adds to a much more dynamic and energetic conversation. So this next one here. Oh, I threw this one in. I'm going to do this very quickly. This is just a little bit about framing this as election interference. ABC happened to blur out, of all things, they blurred out Trump's text number on his podium. So that was pretty ridiculous that they did that. But let's move on to the next story. France. All right, we're going to start moving. All right, so now we're breaking over to world news and events. It's probably going to be a longer segment, but we'll go right into it. I saw it on the morning. I was at the gym today. I saw people talking about and showing the riots and things that are going on, the protests in Paris. It's been going on for more than a week. I don't know if you guys know much about this, but they're basically protesting on the changes that they're making to the pension plan, raising the age from 62 to 64. So there's a whole lot of unrest over there. And France loves to protest. If there's something wrong, that's something that it's kind of a sport to them. But Patrick, I'm going to let you lead off with this one. What is your take on France, Europe, and all other good stuff too?
I mean, the reality is they're kind of putting in similar legislation and proposing that today in the United States, where they're trying to move it to 67 instead of 62. So I think these are the types of things where we see happening globally. It's not because they want to, it's because they don't have the money. And it's just that simple. They can't afford to pay everyone that's paid into these systems, and it's crumbling before our eyes.
Yeah, Dylan, what you got about France and Europe in general?
I mean, I think there's a guy that what's his name? I think it's Greg Foss, and he's a Canadian. He was a bond trader for years, and one thing he talks about is, when the things start to fail, the U.S. is because we're going to be talking about the dollar. The U.S. is probably going to be the last one to fall, right? You'll see other ones fall. And his belief is a G7 country like Canada being one of the first. And I know that's not completely related to France, but the idea is that these smaller countries or smaller economies that are more dependent on larger economies like the U.S. Show cracks a lot earlier. I mean, I remember hearing a few years back that France was kind of banning emails after 5 and was cutting down work days and I don't know the exact details, so you have to look it up, or let me know in the comments. But it was basically like their work schedule was a complete joke compared to what we do in America. And I remember, I was working with some French colleagues at the time in oil and gas, and I remember, them talking about it, and talking about how Americans work all the time, and how they want to take time off and relax and do all that. And then now we're seeing implications of that, or potential implications down the road of what happens when you don't do the work, we don't produce. And now they get 2 more years added on to their retirement. And I don't think that's good in general, because it's not what people signed up for. But I just think it's just signs of things changing and cracking.
Definitely. I think that's definitely where we're at. And it's a sign of the economy, a sign of like the aging workforce, that they don't have the currency to support these people. And I mean, everybody talks about, like, it happens in the United States. It happened. They changed the date from 62, 65, 67. Basically, you have a sliding scale from 62 to 70, I believe, for retiring in the US. But they moved the dates up, and it really is about like it's the demographics too. But
Mhm.
Social Security is supposed to go belly up in the next 10 years if other things don't go belly up first. It's going to be interesting. I always thought it was very interesting that they were even covering it, because they don't cover a lot of dynamic world events lately. But that one that's what really caught my eye, is that they are actually covering something like that. But
Yeah.
there's even more to talk about the international scene. Let's see. Of course, I've got weird things popping up, but let's see. So going over to not real estate, sorry. But here's a rundown that was pretty good. I saw a lot of this last week on Twitter. Just some of the things that were happening in the last week about the dollar and how it's changing over the globe. You could see the different things that have happened the past week. Number one, the BRICS nations account like they're just showing how big BRICS is. Two of the countries, China and Brazil, just reached a deal to trade their own currencies. This is on the past weekend, like in April or end of March, early April. A couple other countries agreed to, like, they were getting out of the dollar, the euro, the yen, and the British pound, which happens to be all the components except for the won of the Dixie, so that Dixie measurement is going to go away or not be minimized. So we can talk about that. I mean, there's a lot. I'm going to pause there because there's 3 more to go. But there's just so much going on. That's why I was saying that this segment could be pretty large. And as I sift through all the international news and everything that's happening, we could talk about, like, the BRICS countries is a huge thing, and it's finally getting the attention. I know I saw on Tucker Carlson the other night talking about that, and talking about the I think it was just last night they were talking about the end of the U.S. dominance for the dollar. So, Patrick, I know we talked about BRICS a lot, and the death of the dollar. Are we finally getting to that point? Are we really on the tip of it?
No, I don't think we're the tip of it. I think we're well past the tip of it at this point, in my opinion. I think the tip of it was like, stimulus money being floated during COVID time. This is not the tip of it any longer. This is like we're ankle deep and going straight to knees, and then all of a sudden we're going to be underwater and have no idea what's going on. This is not a good situation that we're in right now. We have some ridiculous shift of monetary power happening all throughout the globe, not just in Europe, not just in any of the Asias, not just in Mexico. Mexico's joining BRICS. What the hell? What the actual hell is going on?
Yeah, Dylan, I don't know if you heard about Mexico or the other countries that are interested in joining BRICS. It's getting to be a pretty long list. But what's your take on BRICS and everything that's going on in the last couple of weeks?
I mean, it makes sense to me. I think when you start excluding people, Patrick said when we did the stimulus money, and I don't fully disagree there. When we put sanctions on Russia and we weaponize the monetary system against them, when we put sanctions on the Canadian truckers and the monetary system was weaponized against them, when you get enough enemies, they're going to start banding together, teaming up, and forming new alliances and forming strategic trade partnerships. And so that's not surprising at all. And I definitely think it is a sign of the dollar. But there's some stuff I shared that maybe we're going to get to here in a few minutes about just like the scale of this, because I think that's important when we talk about the death of the dollar. It's generally not seen as something that happens just overnight, and nor would we want it to happen overnight. But it's a series of small events over time that leads to a decreasing level of dominance of the major reserve currency of the world. And so that's something to pay attention to. And I think if you share a few videos later, I'll let you get to that. I can bring that back up, which I think is interesting and good to put things in perspective. But I think one thing so far is like some of these smaller countries, some of the smaller alliances, I think they'll start failing before the dollar fully fails.
Yeah, I think there's so much to. I'm going to share a couple things, and then we'll talk about those videos. I think you're talking about the ones with George, George Gammon, who's great. But here's a couple other tweets I wanted to share about the reserve currency. Typically, the world reserve currency goes about 100 years, give or take, and you see the history from Portugal, Spain, Netherlands, France, Britain. But the real thing and then the U.S. and is Bitcoin going to fill in the next square? We don't know, or is it going to be something else? We'll talk about that in a moment. But the thing to really note is that while it's drawn like a nice clean chart, you go from A to B. There's some gray areas where these overlap for years, possibly decades, as there's a rise up and a rise down. Also, like here's another one about, you were talking about other countries. Saudi Arabia was probably going to be the more dominant country in BRICS as soon as they officially join. But they're saying they're not interested in pleasing the United States. And here's another OPEC announces that they just said they're going to cut 1 million barrels per day. And we're already seeing prices start to go up around for gas. It's going to continue. And then lastly, I wanted to share, and might be a little harder to see. I'm trying to zoom in here, but I was watching this video from Kitco News, which usually covers precious metals, but they were talking about BRICS, and they said BRICS has a meeting in August in Durban. I'm not sure where that is. Patrick, where is that? Do you know where that is?
I don't know where Durban is. No.
Yeah, I don't know where that meeting is, but it sounds Middle Eastern, but I'm not certain. But their meeting, it's probably going to be like India. Maybe that's probably one of the BRICS countries is a good guess. Maybe Saudi Arabia. But they're going to meet, and one of the agenda items is to discuss a new global reserve asset to rival the U.S. dollar. That could be a basket of currencies. It could be a new currency that they just create.
Durban's it could be South Africa.
South Africa. So South Africa, that's probably why I didn't recognize. If it's not Johannesburg, I really don't know it's a town in South Africa. But that South Africa is one of the 5 original BRICS countries, so that makes sense that they are hosting it there. But it's here. It is August, so we have all these timelines that are just pushing towards the summer. It's going to be. We're April now. April to August is only 4 months. Yeah. We're talking about a new world reserve currency that could be out there to rival the U.S. dollar. We've heard about the SDR, or special drawing rights, as a basket of currencies. We've seen the Dixie. They're not looking at the Dixie anymore. There's a lot of turmoil that's going on the world stage with finances, and then we're not hearing about in the United States unless we seek it out, or if people that are smart enough to watch a channel like this. Dylan, what's your take on all these different conversations that we could have on the global stage here?
There's so much. I think one thing to keep in mind is that, you have to be able to unseat the incumbent. So you can gain all this momentum and you can join your forces, but you still got to displace the leader. And I think that's something that is like a pro in this situation, or something that, or maybe not pro, but something to consider. And we're hearing about the BRICS coming together. It's like they're gaining strength, but they still got to knock over that final domino, which is unseat the U.S. dollar. And so with every action, there's a reaction. Or what is it? An equal and opposite reaction. Mm-hmm. So
for every action, there's an equal but opposite reaction.
Yeah, and so it's like we're hearing about things all these other countries are doing, and I'm curious to see what you guys think, but also see what type of actions are the United States going to take, right?
Man, if it was me, I'd be like, hey, United States, you know what we should do? We should join BRICS too. We're going to play on your team. We're all going to be one big happy global family. Yeah, that's probably what's going to happen.
Well, I was just checking earlier on that G7 image that I shared earlier that Mexico was not on that list. That was a little surprising to me, but I don't even see them. They're in the G20. Let me share that one more time. But there's the G7, the G8 is just adding Russia, and there's the 20, which is really the BRICS nations. And it's interesting. I remember, I don't know which. I think it might have been Confessions of an Economic Hitman book that I read. But when the Bank of International Settlements has meetings, there's layers to the meeting. There's like a meeting room and then a smaller meeting room. The smaller meeting rooms for the G7 or the G8 if Russia wants to stop by. And then there's the G20, and everybody else sits outside and waits for these people to come in and out of the rooms to get conversations. They're not even allowed in the main conversation. So Mexico and the BRICS nations are like, they're in that layer 2, call it bucket 2 if you want, but they're in that layer 2 of the global financial structure, and they're trying to kick that door down to be in layer 1, or say blow up room 1 and just be they're now layer 1, because layer 1 doesn't exist anymore. So it's going to be very interesting. But I think it's really interesting to say, like, yes, it happens, like it's kind of a death by 1,000 cuts. It happens slowly over time, and things erode and erode. And we haven't talked about the banks. It's been pretty quiet about the banks right now, but there are things that are going to happen in April in the United States that are going to come back to that, like, the debt ceiling, and we're going to be talking about that again. And we're going to talk about banks and credit default swaps and mortgage-backed securities and commercial property. We could talk about that a little bit, but what I wanted to really share is, like, my thought, and what I heard recently is a story where I think that the next bank that could fall and has like huge exposure to I'm trying to talk and find this story at the same time. The story that I'm looking to talk about, and the bank I want to talk about, is Deutsche Bank. And I think that they're highly vulnerable about what's happening, because they have a ton of exposure to the derivatives and also the credit default swaps. And credit default swaps basically is insurance that something you own is going to default. They've got a ton of, like, their insurance premiums went up by like 30-50% this week, and it's impacting them if they go under. And they were rumored to go under before it was Credit Suisse went under. So they were rival to think, they thought either Credit Suisse would go before Deutsche Bank. But if Deutsche Bank goes, these banks, because they do these swaps of risks, it's going to be a cascade effect throughout the entire global financial system, especially the Western world version that's non-BRICS. And then it could ripple into pension funds and government employees. And then people won't go to work because it's pointless. That people that are retired can't get their money. I mean, is that the recipe for the meltdown? I don't know yet, but that's a scenario that's kind of starting to play out in Europe.
Yeah.
Pat, who wants to jump in?
I was just going to comment on like the meltdown, which is stuff we talk about a lot. And like, we talk about the death of the dollar and the rise of these new countries. And I think a big thing to keep in mind is a lot of times that the establishment of like the global reserve currency, or the dominant currency or dominant nation in the world, is through war. And those wars have been violent and deadly, and, just extreme loss of life and destruction of assets and everything. And, like, we don't want that to happen. Right. And so we don't want some major global battle, because that can be extremely, extremely destructive. And so a lot of these things, I think we might be seeing things play out to, it's a new, what do they call it? 5th generation warfare. So it's not physical conflict, but it's like digital and like financial and strategic, to where, like, when the time happens, if a flip occurs, that there's no even incentive to go to war. Right. Because it's just not there. And, I think that's a better outcome than a world war or anything like that, or any sort of major collapse of everything, just these small cuts. And then eventually it switches, like one of those optical illusions where you look at it long enough and it changes into a different image.
Well, I think you can make a strong case that, much like, going back to our first story and the distraction, we have a war on the world stage right now that's in the Ukraine. Is that a distraction and diversion from the real wars that are going on, that are trade wars and economic wars, and the battles that are happening underneath, and the cyber wars, the information wars? That's what's really going on. It's not really a hot battles, and we're not going to go to nuclear war, because whoever wins is going to want to get, if they're really going to do a land grab, they want the land to actually be worth something. If you're going to nuke the land is virtually worthless. So I think that all this talk about hot wars or whatever, just distractions. The real war, we're already in the middle of it. And a lot of times when you're in the middle of something, it's hard to know until it's after, and you look back and say, oh yeah, that was the event that really was the turning point. But you don't know that while things are really going on. Patrick, I see you nodding. I'm going to go to you. What do you think?
We're in the middle of it. That's exactly how I feel. I don't think we're waiting for like the next thing to happen. Is like, what's the next thing that may lead to the big thing? You're right in the middle of the big thing. You're like literally in the big thing. It's happening right now. Today, I went to the silver store. I went to the gold shop. They can't get supply. the premiums are ridiculous right now. If you try to go get an ounce of silver, you're going to be paying close to 25% premiums on these ounces of silver. You go get an ounce of gold, they'll be like, sorry, we don't have any right now. I'm sorry, come back later. So these are the reality of what we're seeing. It is happening today. Gas is over $4. Home prices for a 1,300 square foot home is under $500,000. Sure, that's not very cheap, right? When you're looking at the cost of living, you want to get a car and a house for your family, you can't afford it. It's happening today. They have been talking about raising the age for the Social Security for years. They're actually doing it now. These are the things that you guys aren't seeing. The food disruptions, they're happening now. All of the stuff that you are seeing now, they laid the seeds for this a year ago when we started having these conversations about the truckers and them not being able to get the right stuff they need to keep their soil healthy, right? We talked about them not getting the fertilizer they need. What does that kind of lead us down to? Lower production of food. We're in it now. We're not waiting for it. If you're not awake and you can't see that yet, I really can't help you guys. I mean, like, seriously, grow up. Get it through your stupid heads, because what's going on now is really something to worry about. And I'm not trying to fear monger. I'm just telling you the facts. If you're not seeing it's happening now, I don't even know what you're doing here.
Yeah, Dylan, I saw you wanted to chime in a few times. You want to add a little to that?
Oh no, I agree. Yeah, we are definitely in it. And I did like how Patrick said, like, you don't know like what event's going to lead to the next thing. Like when you're in the thing, you can only look backwards and be like, ah, yeah, that event was a catalyst, or that event was a major milestone leading up to this. And so, you know, I think Patrick's spot on in that, and his words were very wise there.
Yeah, I want to close the segment.
Hey Jeff, can you make that a reel for send it to my wife, please? Thank you.
I think I lost the audio on that one. I think we glitched out. But we'll do what we can. But I want to close out the segment. It's a little woo-woo-y, if that's even a word. But this has been circulating on Twitter as well, which is an Operation Sandman. And if you haven't heard about this, this is probably the one of the worst ways to go for the United States, which is that there's more dollars on the global stage than in the U.S. So more outside the U.S. than inside the U.S., mostly in the form of U.S. treasuries. But there's talk like of all these other countries just coming up and saying, hey, on this certain date or whenever this is, they're going to dump all the dollars and all these T-bills on the market. And the idea there would be that if they don't want to be the first one, right? They don't want to be the first one out there and say, hey, we're the first one that are selling treasury bills and we're starting the global bank run of the United States dollar. But they don't want to be the last and get nothing. But if they do it all at the same time, they kind of share the pain, share the wealth, and then it's kind of like part of the alliance. So all the pain goes back to the United States. And I've heard many things I've heard rumors of the dollar on par with the yuan, which would mean a haircut of purchasing power by about 80%. So that would be like, right now it's $1 equals 5 yuan, I believe. So now if it's 1 to 1, gas prices now are like $20 a gallon. And that's another event that could happen where, like, why am I going to work for $15 an hour when it costs me $20 to fill up the tank to get there? That's going to be another event that could be happening. So there's so many things that are happening. We didn't even talk about real estate. We could go there for a moment, but I'm going to save that for later in case we have time. But I'll just say that not many people are buying a house right now either, or cars. It's very difficult, and loans are very difficult too. But let's try and turn the page to something else. So one more thing to talk about, which a friend of the show. I met George Gammon once in Miami last year. I'd love to have him on. George, if you're listening, that's an invite. Please contact us. We'll be reaching out to you. But I know, Dylan, you have a couple of clips from one of his recent shows that you wanted to share. So let's watch the first one. We'll talk about it.
Let's go right over to the BIS. And I think we might have used this chart the other day, but it's definitely worth going back to again. And you can see the dollar share of official foreign exchange reserves. So this is basically on balance sheets of central banks and whatnot. It has definitely gone down 100%. Well, it hasn't gone down by 100%, but I'm saying it's definitely gone down to the point now where it's under 60%. So if you just look at this chart, you say, my gosh, that is really bad. Not good. Maybe China has killed the dollar. But then you get into the nuance. Very important. Devil's in the details, right?
Mhm.
And what we want to do first is we want to look at the dollar decline, but then we also want to look at the dollar's nearest competitors. Euro, call it, I don't know if you want to throw in the pound there, but call it the euro yen. So during this time frame, when we've seen this decline of dollars being held in the reserve accounts of these official entities, mostly central banks here, have we seen the dollar's two main competitors go up? Not really. The yen slightly, but that really wouldn't account for this decline in USD. Euro, definitely not. Euro's actually gone down as well on net. British pound, So it is all about the other. And you could say, okay, George, well, that's got to be the yuan. See, the yuan, look at what Russia's doing. Saudi Arabia, India, they're all doing it. But then we look at the actual data and we see that this other isn't just a result of the Chinese yuan. It's actually a result of these central banks holding a lot of these other smaller, quote unquote, reserve currencies. Probably not the right name, but all of these other currencies on their balance sheet as reserves. I think that's a better way of saying it. Like which currencies? Okay. Well, number one, Australian dollar, Canadian dollar, and yes, the yuan, and the Swiss franc. I also saw another report stating that a large portion of this is from.
Okay. So Dylan, unpack that for us a little bit.
Yeah. So a couple of things. There's the high level. Just George does a really good job of looking into the numbers and sharing numbers to back up his claims and perspectives and to support his analysis. So I think that's a good idea there to kind of cut through some of the hysteria and the headlines of the dollar's dying and really look at how is it dying, where does it stand compared to his competitors there. And I like how he questions it. Is like, okay, well, it's declining. Yes, that's happening. Then what are its competitors doing, and how he breaks down what the largest competitor is at other, and then give some reasons why that may be going up as well. So I think it's a really good perspective to consider when you see these headlines. And he's also a good resource to check out if you're interested in this kind of stuff.
Yeah, I think he's great. He does a lot of he's pretty much self-educated on his economic background. He's done a fantastic job with that. So that was the reserves at the central banks, right? And the currencies that they're holding.
Yeah.
Okay. So I would look, let's watch the other segment, and that's, I have some comments on that. So Patrick, can you throw up the other segment here? Or actually that's for me, but you can play it.
Yeah. And this one where he kind of talks about the size of the number of dollars in circulation versus some of the BRICS dollars or whatever BRICS currency in circulation.
Percentage of that other category, it's right here, that 10% that's increasing, it would be a much smaller percentage even of that other category. And then I want to point out the global GDP right now is about 104 trillion. And as most of you guys probably saw that interview I just did with Jeff Snyder, we talked about, okay, how much, if the global GDP is 104 trillion, how many dollars are actually on the balance sheets of all these entities? If you just combined all of the balance sheets in the world into one, so the global balance sheet, how many dollars are actually there? And his guess was the same as mine, and that was somewhere north of $100 trillion. So it is absolutely true that the yuan is taking a bigger and bigger share, and it's happening very quickly. But that share has gone up to 336 billion with a B in a global economy of 104 trillion, where there's literally over $100 trillion on global balance sheets. So is this accelerating? Absolutely. Is it a drop in the bucket? Absolutely. So we should watch this, and this let me be very clear, this absolutely illustrates this push towards de-dollarization globally absolutely illustrates the dollar is losing reserve currency status. There's no doubt about that. But again, my point is that this is a process that happens over decades. It doesn't happen over days, weeks, months, or years.
Interesting perspective. Dylan, I assume you agree with his perspective on all that?
I think it's a perspective. I don't know if I know enough to fully agree or disagree with that. It could be like one of those situations where it's gradually then suddenly, and that would be a cataclysmic suddenly if the numbers and scale of the size of the competing currencies is true. I mean, over 100 trillion compared to 330 billion, like that's 1/3% of relative to the total number of dollars out there. And so if the dollars were to shrink to something half that size or half of 100 trillion, that's massive, right? That's an extremely large amount of money shifting. And it seems like it'd be a cataclysmic thing. So for that to happen overnight, like that's scary, for something like that to happen overnight. I don't know who would want that to happen overnight, because I don't know who would be able to handle that.
Well, I have a counterpoint to that, and I'll give you a choice, Patrick. You want me to go with mine, or you want to go next?
Go ahead.
All right. So when you're looking at the balance sheets of the central banks, which is what George is doing, which is a great theory, it's a great thesis to go at, but understand what central banks also hold. They hold gold, and they also hold a bunch of T-bills. So they have exposure to precious metals, and they already have exposure to a ton of dollars already. So it would make sense to me that they would hold alternative currencies to kind of hedge themselves and spread out their risk. So it doesn't surprise me that, but with so many dollars on their T-bills already, and all the treasuries that they have, and their credit default swaps, and their mortgage-backed security, they have all these exposures to these other vehicles, and those are on the balance sheet too. Because those are on the balance sheet and they're reflected, and they may not be the right numbers, but they're there and they are much bigger. But the usage of the currencies around the globe to settle between nations is not the same as looking at the central bank balance sheets, because those treasury bills are kind of held in the century. They're not the exchange mechanism. So that's why that would be my argument to saying that, like saying it's a drop in the bucket is not accurate, because of all the other gold and all the treasury bills that are out there. They're also in those balance sheets too. Patrick?
I think it's a little bit more complicated than we'd like to give ourselves credit for. Because as we talk about numbers of 300 billion or 100 trillion, let's talk about the numbers that deal in the quadrillions. So I can think that I could see this as a drop in the bucket, right? But this drop is the bet that everyone is hinging on. So I think that the impact of what happens of this drop in the bucket has ramifications that could be in the quadrillions in derivatives.
Yeah, and that's the sleepy giant that's out there, right? That's and no one knows exactly how many there are. But
yeah.
I think it was I'm trying to find it while we're talking now, that the number of assets out there, I think it was 900 trillion, and it showed a chart compared to here. I got it 1 second. Yeah. It's and of course I'm lost in the windows, but it's $900 trillion worth of assets compared to everything else. So here we go. So this shows the relative scale of Bitcoin, and I'm sorry, there we go. So Bitcoin is $400 billion compared to 900 global asset value of 900 trillion. And these numbers are astronomical. It's very hard for people to understand. And quadrillion is just beyond, it's the next thing after trillion. So the entire global asset value from Bitcoin, gold, art, collectibles, real estate, equities and bonds, and what they call money, which is cash. It's just under a quadrillion dollars. But what's not represented here is the derivatives, which are bets on top of bets. Like if you own an equity, like a derivative would be like, oh, well, it's kind of like a tracking stock. If you're rather owning the entire S&P 500, you could own QQQ, which I think is the right tracking stock. I'm not sure. That might be NASDAQ.
And let's go QQQ.
Yeah. So if you go QQQ and have that, you own QQQ, which is not owning a real stock. It's a tracking stock that tracks one of those major indices. But you don't own the stocks that are in the index. So instead of buying 500 stocks, you buy this one tracking stock, which has no real equity behind it, but it mirrors how that performs. That's a derivative. It's kind of like when you buy Bitcoin but can't remove it off of the exchange, or it's just a tracking stock. It's like it goes up and down, sure, but can you actually get the Bitcoin off of there? Like, you don't have the Bitcoin. That's why we talk about self-custody when we get to crypto. You don't have those assets. You don't have the gold. You have to have the gold, the silver, the Bitcoin in your physical control and under your self-control, so that someone else can't get it. And the rehypothecation factors that are out there can't, get ugly, like what Lynette Zhang talks about. And we'll talk about the precious metals shortly too, but 86,000 claims on every ounce of gold that's out there. So it's very, very complicated, and that's done on purpose because it's a huge puzzle, and they don't want you to understand how the banking system works. They don't want you to understand what a credit default swap or a mortgage-backed security is, because people's eyes roll back in their head when they hear these complicated things, so they don't want to know, because I work hard. I want to come home and have a nice experience with my family and not have to worry about financial issues every single week, which is what's happening now.
Mm-hmm.
All right. I think we beat that one up pretty well. I think it's time to, why don't we go there, and we'll go over to gold and silver. So that's usually Patrick's lead in. So I know we have a couple of stories about gold and silver and how the price is just climbing and the ability to get gold and silver is tough. But Patrick, why don't you give me some insight on gold and silver markets right now? You're muted.
One of the things that we expected in this market, thanks, Jeff, that we really thought we were going to see silver and gold do well this run. We're starting to see the case for that. Gold's going to all-time highs. Silver is hitting right now. They're saying it's $25, but if you really go out and look, they're paying $26 at the local shops. So you're already getting more than the spot price just at these shops. So when you look at the real supply of gold and silver, and this is an interesting statistic. So let's think about this, right? There is only enough gold that we've discovered throughout the history of mankind right now in all of history to fill up an Olympic-sized swimming pool. That's right. That's how much gold we have. Like, you could put just enough to fill up an Olympic-sized swimming pool, maybe a little bit more. Maybe it's a heaping, Olympic-sized swimming pool today. But there's just not very much gold out there. And it's a myth that there's so much gold in the people's hands. I don't think the governments are worried about confiscating gold again, because as we've said before, guys, there's just not very much gold sitting in a lot of Americans or even the global citizens' hands. What you're seeing is that these banks have a lot of the gold, and what we're seeing is a ton of purchasing from the banks. We are seeing that there is the COMEX going to be like depleted here of supply. We're seeing Andy Schechtman from Miles and Frankman's tell us that he has seen more purchases in silver in a 10-day period than he has almost in a whole quarter. I mean, you guys, he is so busy, he barely has the ability to supply everyone as they're coming in. They can't ship it out fast enough. And the simple test here is just go to your store. Go to your local gold shop, your local coin store. See how much an ounce of silver actually costs you today. If you can get it for $25, as Spot says, I'd be very shocked, because I guarantee you that's just not happening out there.
Dylan, I know I think you added this story earlier about how the gold is up to 2,000. And yes. You want to comment on this a little bit?
2 comments. One, I don't believe you that is one swimming pool, Patrick. That sounds outrageous. But it's something to look up for sure. It seems like we'd have more, but I'm probably not right on that one. But I would say look that one up. But then the article, yeah, if you scroll down on that article, I think it has a really cool infographic.
This chart or more?
Do you have to share the screen?
Well, that would help. Yeah, sure.
Yeah, you had it up there. Now it's I can't see the chart now. This one right here.
There we go.
I thought this was a really interesting one. Like, we have seen gold push up, like Patrick says. It's like gold's pushing up, silver's pushing up, because people want to own these assets that, when we kind of financialized everything, we didn't need them. They were just a dead rock. And you hear a lot of people in the Bitcoin community call gold and silver just dead, dumb rocks. But now people are seeing that a lot of the things that they had traditionally or have had trust in to store their wealth or hold value, might not be worth that trust, and so they're moving to things that have historically had that trust and have proven time and time again to hold that value and be valuable for humans. Gold and silver being those. And it's like this chart just kind of sizes what we're potentially in a very visual way.
This reminded me of the Wall Street chart, which you may have seen pop up while I was getting it already there, but it's very similar to me, and I'm going to try and get it again because it's, as usual, it's being elusive for me today. It's if you ever drive, if you're ever on a show and you're actually producing and putting all this together at the same time, it's kind of interesting to experience, but hopefully you guys can see that now. And there we go. So there's the Wall Street psychology chart. So if you look at that compared to the chart that we were just looking at, you can see the similar kind of comments and the capitulation. It's almost the exact same chart that Dylan's talking about here on this chart here. So, and
I would say go ahead and go back to that chart real quick, because I want to point out that one right there. So that pink chart, the one that from the gold that we're showing, kind of basically shows we're at the complacency stage. Right. And I know a lot of people think we're in the disbelief stage, that we're in a suckers rally.
Right.
That's really going to turn into the new
hope
bull market.
Yeah.
So we got two very different points in this market. I don't know. What do you guys think?
I've been thinking that we are at the disbelief stage because, I mean, just from, that's my own opinion. I just like this. I see the frustration. A lot of people like, let's get it over already. We've been waiting for so long for things to go up, and we've seen like no one seems to there. But I'm also starting to see renewed interest in getting more information about gold, silver, and Bitcoin. Maybe it's just because of the circles that I travel in, but just I see more interest in the last month or so than I have in the previous 4 or 5 months. Mm-hmm. Patrick, what's your take on it? And you're muted again.
Sorry, I'd say that disbelief is the beginning of hope, right? That's kind of where they're at. So the end of one is the beginning of the other cycle. It's like a chicken or the egg situation. What I do believe is going to happen here is I just don't see much room for downside in any commodity right now. I don't see silver going down to 17. I don't see gold going down to 16. I don't see Bitcoin going down to 15. I don't see oil and gas coming down to the point where it's a reasonable bet for us to drive anymore. I think we're way past $1 gas. It's gone. It's never coming back. This is how I feel. So what I believe is happening is we're seeing the death of the dollar. This is just simply what we've been talking about. The dollar is worth less and less every day. So naturally, you would expect us to wake up and hear news saying things cost more. I am not surprised here.
Well, I'm going to make the case that for the fact that they could be right, that this could be that we are in what they call the return to normal or the complacency stage. Mm-hmm. So the way I make this argument was that if this super bubble, everything's overpriced. Now, there's been talk about like inflation, then deflation, then hyperinflation. So we could be going towards a deflationary stage. That could happen. But also I could see that if there's an implosion and mass chaos in the financial world, I could see everything just kind of burning down and all value goes out through the window. And while prices might go up, but the value goes down because no one's going to be willing to pay $20 a gallon for gas or $100.
So let's take a step back though, Jeff. Help me paint a different picture. Okay. Tell me how things get better. Hypothecate. Give me an example of where things get better.
I will see your hypothecating and hypothesize about that. How do things get better? I think we go back to a gold, silver, real asset standard, and that's kind of like it's probably another topic for. This has been part of Nasara and Jassara conversations, or people that like to collect the Iraqi dinar, for example, about revaluations and going back to what nations hold. What is the value of a nation? It's basically what their natural resources. Mm-hmm. And if you do an audit of what they own and can provide and say, well, we're going to back our currency with our natural assets and make every country do that, because we are seeing that countries are going back to, ironically, what our former president just did and become nationalized and have that national perspective of saying, let's take care of our home base first. Let's protect our own country, our own currency first. If all countries do that, and they say, and then on the global stage says, why don't we just go and put all these things together and we just like, we revalue all the currencies based on the assets that each country holds. And then we start trading based on that. So that's where I think the recovery could come from. But in order to build a new system, you have to tear the old one down. And there's so much damage from the financial system that's been built, even since 2008, with all these extra terms. I mean, mortgage-backed securities didn't exist until like 2000. And that led to 2008 implosion. And that was the Big Short. And now we're in Big Short 2.0, and everything else is imploding in front of us. And we could see pension funds go. Like just look at the erosion of the dollar since 2008. It's just like a factor of 10. But wages might have doubled on average. It's just we need to tear down the existing system to build a better one and start over.
You can't fix the system from within the system.
Correct.
And I guess the major question is how fast that transition is going to happen, and how long can the current system maintain and hold on and kick the can down the road. And I know you guys talked about, like, you know, we talked about BRICS and the dollar, you know, the dollar collapsing. If that happens fast, right, it seems much more likely we're in that that kind of complacency before the big drop, if that type of scenario plays out really quickly, right? If it doesn't, then and it's a longer time frame, then we could very much be in that kind of suckers rally, or right before the hope, right before the new bull run that makes the bubble even bigger. Because it's very possible we go into a bubble 3.0 versus 2.0, right? If they're able to just continue to kick that can down the road there. But like Patrick, you said, like commodities are going to become valuable as long as more of these financial assets start losing value. People start losing trust in that, because people know they can trust gold, they know they can trust silver, and they know what's there, especially if they hold it in their hands. And
yeah, I mean, there's just no way that gold's going down to 1,500 again. The way that they're printing dollars, the way that the entire global community is acting like spoiled little rich children who have no idea how to balance a budget. Like, until what Jeff is saying here is, yeah, we need to start having responsible conversations about, here's what we do with value, here's how much we produce, here's how much we consume. Let's start having some adult discussions. That's not what's happening here.
But I saw there was a bill proposed, and I got this one from George as well. That it was, I think, 3 congressmen. It's on April 4th. 3 congressmen introduced the gold standard bill to stabilize the dollar's value. So they pushed the bill through to basically allow the dollar to be redeemable for gold, which it doesn't seem like it'll work. But people are talking about it. People are thinking about this. People are considering this, and I think the conversation's good.
I wouldn't believe that for 1 second. I don't think that there's any chance of the dollar being valued to gold ever.
No, the chance of it happening is probably low, but there was a bill introduced.
Never again.
Lots of bills get introduced, unfortunately, and they never go anywhere. But just to finish out the thought on gold before we talk about other prepping stories, Patrick, you shared this link in real time here. It's like, how much gold is 165,000 metric tons, the total mined in human history. There it is, an Olympic swimming pool. And so that link will be in the show notes, of course, but that's interesting. I hadn't done the math and figured out how many ounces that was and how big a gold bar is, but gold bars are pretty dense and compact.
3.42 Olympic-sized swimming pools.
Okay.
I mean, okay, Dylan, like I was saying, it was close.
Like,
yeah,
I know.
It's not. Maybe you're right. Maybe it wasn't like one. Maybe it's like a big pile. Maybe they had more since I last heard about it. But the reality is, it's not that much gold.
Yeah.
It just, there's not vaults and vaults and vaults sitting full of gold all over the world. It just doesn't look like the way in the movies have it. You don't need like 1 million trucks with Die Hard and Bruce Willis like running away. Like, it doesn't take that much. 1 bar of gold right now, what does it cost right about now? Like $800,000 for like one of those bars you actually see in the movies. You're looking at almost $1 million a bar.
Like
how much is a bar? How much does a bar weigh?
I think it's like 40 pounds, right? Or something like that.
I don't know. I don't know exactly how much the bar weighs. I know you got to figure out the troy ounce thing.
400 ounces.
Okay. Well, 400 ounces, that's $2,000. That's pretty easy math. 800K. So that's That's getting close to $1 million per gold bar. Jeez.
That's my point. And it fits like in your hand. It's not like it takes a long. I mean, you carry a gold bar like this. That's $1 million.
Yeah, that sounds like another workout that I don't want to do. But I just these concepts and these numbers are just so outlandish, guys. I mean, I don't know if you ever think about like these numbers and just like the perspective is totally lost. Billion, trillion, whatever these budget numbers. Like I used to be like, you look like $1 million. Are we ever going to say it again? Because $1 million, you look like one gold bar. I mean, that's like, I'm like, it's just not the number that means it's not. You look at watch the older movies, like, oh, I want to, Who Wants to Be a Millionaire? That was a show. Now it's like, who wants to survive until next year? I need $1 million.
Yeah, it's these scales are getting wild. I guess this kind of stuff happens when you start inflating the currency away and things hyperinflate. It's just like the scales just get bigger and bigger and bigger. And the problem is like if you build a society and perception around certain price points, it's hard to rationalize or conceptualize those new price points. Like people think that $20 for a burger is expensive. And
it is expensive. $20 for a burger is expensive. The idea that you'd go out with your family and spend $100 as a family of 4 to get cheeseburger and fries is
exactly
ridiculous.
My point exactly, because if you inflated a $15 burger a few years ago is based upon inflation, right?
That was a gourmet burger.
It's all the same. It all comes down to like how much is in your account or your wallet at any given time, right? Mm-hmm. It's not that big of a deal if you're making $100 an hour, right? You can buy a $20 burgers. Okay. It's not as cool as it used to be, but I mean, it's not as painful either. But if you're making $15 an hour, mm-hmm. but the prices of your food are doubling and your income isn't doubling, it becomes painful. So it really is. It's that prices are a ratio between two things. Like the burger could be fine. Is it worth $15? Well, going back to what does $15 get you, or how do you earn those $15? Is it 1 hour working at McDonald's, or is $15 like a postage stamp, or do you get paid, $3,000 a day? It's really all relative, and the problem is that the wages have not kept up with these inflationary prices. That's the core issue that's going on.
Can I ask one question, just like a quick yes or no? Do you guys ever see, like in your opinion, yes or no, do you ever see the dollar gaining strength again, where we start seeing a dollar cheeseburger?
Depends on what you see as the dollar. Do I think that
no, simple, yes or no? Yeah, that dollar right there. Will that ever buy you a cheeseburger again?
No.
Probably not. No, I doubt it.
That's what I'm talking.
Maybe a yard sale with a little plastic one from a kid's series. That's about it.
That's what I'm trying to explain here, guys. Is
well, not America.
Don't hold your dollar so tightly. Don't have your hope in the dollar. We are sitting here talking metrics. How many dollars of this? How many dollars of oil? How many dollars in this? What I really want us to be thinking about is you don't look like $1 million, Jeff. You look like 100 ounces of silver or gold, like, something so shiny. Dylan, you look like 1 million Bitcoin, like you are so hot. You are definitely 1 million Bitcoin.
There's only 21 of me in the world then. All right.
You get my point though? We need to start thinking differently, because these dollars in our wallets, we hold it with like such treasure, and we like hold on to these dollars like it is the stability that allows us to go to bed at night. And I have a feeling that you're going to wake up one day and realize that your foundation is on like quicksand here, and it's melting away because your hope was in the dollar. And don't put your hope in the dollar. Really be taking a second. If you're going to make this far, guys, this is where you wake up. The dollar is garbage. Get ready for chaos. I don't think anything we are seeing is saying the dollar is getting better.
People do things for only two reasons. Either they have to, or it brings them some kind of pleasure or joy. That's really it. So you're not going to have people learning like this new system, new currency system. I mean, look at what they try to do with the metric system in English in schools 30, 40 years ago. People did not want to learn the metric system, so it didn't catch on in the United States. So we still have feet and miles and yards and all that other stuff. You want them to learn a different currency system, they're not going to learn it until they have to. but we're getting close to the point where we need to. Everyone's like they're trying to run away from the dollar, and they don't quite know where to run yet, unless they're watching shows like this. But people are going to have to learn and educate about Bitcoin and gold and silver and prepping materials, and that goes to our other and last story about this segment, which is prepping, and that's something I wanted to share today. And this is just one list that I had just looking around. It's not hard to find these lists of like 21 tips I wish I heard before I started prepping. Okay, so you go through things like this, and like this is not to overwhelm you, but things that are like start living below your means now, that kind of thing. But one thing is like don't store it in milk. Don't store water in milk jugs. It's good advice. Also, don't put all your things in one place. That kind of disaster planning. So these are kind of ticklers, and this will be in the show notes. But these are ticklers to think about, like as you're getting, if you want to have, if it brings you joy and comfort to your family to have extra food, extra supplies, things you're going to need. Think about how you want to store them, where you want to keep them, so that you know that they're safe and protected, and that you feel that sense of comfort that preparing for whatever comes should bring you, not just from having gold, silver, and Bitcoin and all those other preparations and cash on hand, but also having food and other things that you'll need.
Ammo, guns and ammo. If you don't have guns and ammo, you're a retard. Get some guns and ammo. They're going to come take it from you. This is so simple. There are so many people out there who are going, I don't need to prep, because when that day comes, I'll just go take what I want.
Well, Patrick, my only response before I throw it to Dylan, I just want to say, never go full retard.
What does that mean?
That's a movie quote.
Yeah.
Tropic Thunder.
What that means.
Tropic Thunder. We'll watch it another time.
No, I hated that movie. It was so bad. I hated that movie.
What?
That's the only movie I've ever walked out of in the theater. I did not think it was funny at all. I'm a huge Robert Downey Jr. fan. I want to be Iron Man in real life. Like I would be Tony Stark today. That would be my dream. Like
I can see that, and we may talk about Jarvis a little bit later. But Dylan, go ahead. You had a point.
Oh, I was gonna say it's like the saying you don't have to outrun the bear, you just have to outrun your friend. Mm-hmm. Right? Like there's a lot of people with that mindset. They're like, look, because they know that power wins, right? And I've mentioned it a couple of times in that software book. I know it's uncomfortable for people to think about conflict, but the power projection game underlies a lot of our actions. And so, like Patrick said, like if you don't have some way to protect your resources, they're as good as not your resources. They're basically going to be the bully's resources. If you can't stand up to the bully, right, the bully will take it and they'll keep coming back, because that's what they do. Because you're basically a honeypot for them. That's undefended. And why wouldn't they do that? That's how it works in nature. That's why bears go after the beehives, because that's why they're bears, and bees are bees. As bees put them up in the tree, the bears can go get them, because the stings don't stop the bears.
That's where the food is. That's where you go where the food is. So, all right. And as we turn the page now off, I want to go back to one of the things that we shared earlier, just for additional perspective. This is to show you the size of Bitcoin compared to the global assets. Bitcoin is 1/2000th, less than 1/2000th of all the global asset value. So now we're going to start talking about crypto. And the next story that I think Dylan, you added this. It was a tweet about MicroStrategies and how I think he owns 1 out of every 150 Bitcoin that will ever exist. So is that a concern or is that a positive? What do you think they're doing?
I think it's pro and con. Like I think the pro is he created a strategy, and he's been implementing that strategy fairly successfully over the past few years to buy Bitcoin and make that his treasury reserve asset. And he's been running his business and being able to generate cash to buy Bitcoin. And he had a loan. He was able to close out that loan, so he didn't have that risk of being liquidated or being forced to sell. And so I think it is a good roadmap and blueprint for other companies. As we talk about big money entering the space, it's a good blueprint for the other companies to follow, that MicroStrategy blueprint. Now, the fact that he owns so much Bitcoin, I think there's two other things to consider, and one's a con and one is a pro. One is, if he is a responsible steward of that Bitcoin and value and supports the ecosystem, he could, there's a lot of things that he could invest in to support that ecosystem that could be for the better, right? And I'm not, I'll believe it when I see it, and that's where the con comes in, because now he could have all this money, all these resources, and he could also use them for nefarious means or things he thought would be good that turn out not to be. Or if he's forced to sell for any sort of reason or chooses to sell, having that large of the network could potentially cause more turbulence on a short-term time frame. But the long-term time frame is that more Bitcoin gets distributed to more people, which is the inevitable result. I mean, if you look at the numbers in terms of wallets that hold X amount of Bitcoins, you're seeing a decrease in the number of wallets that hold like 10,000 or more, or large, massive amounts. So their amount of Bitcoin that those wallets hold are going down, as well as the number of wallets that hold that. And you're seeing an increase of the number of wallets that are holding, less than 1 Bitcoin, and less than 10 Bitcoin. So that is constantly growing. So it's showing that it is being distributed across the network from people that have more to people who have less.
Patrick, what do you think about MicroStrategy's strategy?
I'm a huge fan of Saylor. I think, man, let's take a day where you think about Bitcoin being $1 million, right? Michael Saylor owns 140,000 Bitcoin today.
Mm-hmm.
Okay. 140,000 Bitcoin. That's $14 trillion with Bitcoin at $1 million. I mean, he is poised to be the most successful company in history. Is that math right, Jeff? I saw you doing some.
I don't know if they might have missed a zero, but it's a lot of money.
140,000 Bitcoin
times $1 million. That'd be
times $1 million.
140,000 million. Be 140 billion, right? $140 billion. It's a big number. It's a big number.
It's over $1 billion. It's a lot. It's a lot of money.
Let's ask Siri, right? I mean, the reality is we can get our zeros lost, but I believe it's
ask Siri, because our next story is about Apple. So we're going to talk, and Patrick, I'm going to throw it to you while you ask Siri that question. And that's a great
Siri,
segue.
what is $1 million times 140,000?
She good at math?
Jeff, your quick math is much better than mine. Great job. 140 billion.
Yeah.
So what? I was off a few zeros. I mean, it's still like a crap ton of money, and it's a strategy that's going to win.
I wonder how many dollar bills would fit in this Olympic swimming pool. I'll have to figure that out. All right. So the next story, Apple. Like, Patrick, I know you're a big Apple guy. Did you hear the story? I
did hear the story. I did look it up. The white paper is on all my devices. And I have had a wonderful day knowing that I have been walking around with like the equivalent of the Bible in all of my devices. Like, we've got the digital Bible, like the digital Holy Spirit is in my Apple MacBook Pro. I am so happy it's there. I don't know how that happened and how we just found it. Apparently there's a 2018.
I will. Yeah, that's very strange that it was buried, that people didn't search for PDFs.
How would not find that?
I don't know. So cool. because Macintoshes are hard to search. I don't know. But let's let Patrick have his joy. Dylan, what's your take on this? And what does the fact that it is there mean? What does it mean that it's there?
I pulled it up. So I found it. I verified this today on my new. I got a Mac Mini, and it's there. So I might buy another Mac. I've thought about not going away from Mac, but I might get an Apple Watch now just so I can have the Bitcoin white paper on another device.
Dylan, you're so lovely.
But
welcome.
I think I think I read somewhere that the engineer that put this on there was a few years ago, and people requested to have it removed, and the person who's in charge of removing it is the same engineer that put it on there. So it just hasn't. It's just like one of.
We'll get to it.
Hasn't been attended to. So I think it just kind of represents like the digital revolution that is Bitcoin, and that there are Bitcoiners, there are people that believe in it in all walks of life, and all different nationalities, different colors, different job roles, all over that are doing just little things to try and promote and propagate this network. And I think that's something that makes it so powerful. And that's why we are all here. And, I think it's really cool. And seeing more of this, I think it's important. And plus, now it's on MacBooks and iPhones. And I don't know how many people own iPhones and Macs, but now if they choose to, it's literally right there for them to go and read and check out and learn. And so that's a really cool thing that like is kind of like a, sneaky coder computer thing to hide like information. Like,
it was lovely. It was just lovely.
But guys, what is Sunday?
What is Sunday?
Easter.
The day after Saturday?
Easter. This is an Easter egg.
Yeah. Well, it's just think about like this was like they distributed the Bitcoin white paper to more people than anyone else in history just by putting it on someone's computer.
And they didn't even know it. I
Yeah.
love it. I love
Well,
it so much. It's
My,
such a great person. We should all tip them in Satoshis.
okay. Well, no, not to take away from Patrick's joy or not to stomp on the Easter egg, which I think is great. My concerns were like,
Lovely.
what else is buried on these devices? What else is in there? What else do we
Oh.
be concerned? Now, we love Bitcoin. What if it was something that we hated that was in there? What if there was a CBDC tool that was buried in every
Then
Macintosh?
I'd be outraged, but I'm not.
See?
Today I'm
So
happy. So
that's just something to think about. But I think I'm very happy to be there. But I want to talk. The story I want to lead about today is Ethereum, which is a project I really don't like. But the reason I'm talking about it is because of the timeliness of it. They're doing a major release that's coming up next week. And I want to just give not financial advice because we want to be sure about that. But we've got this release that's coming out, and this is from Crypto Potato. They have fantastic names of websites out there. And they have, I really can't stand the names that these engineers give the project. So you had Shanghai and you had Capella, and they go in the details of what those two are. The bottom line is that April 12th, this comes out, and then they benefited this thing because it's kind of pieces of both into Chapella, which sounds more like a music festival or a concert. Like, who's opening at Chapella this year? It's not a release, but that's the name they gave it. So the bottom line is that there's a release coming on April 12th. So I did a little digging because I remember in the last year, Ethereum had a big release, and this is a big deal. So they had a release. Of course, that's not the right page. There's the trading view. So this is a picture that I made from the chart. So here was the last release in September. And there's an old saying, buy the rumors, sell the news. The news was that that the release, I think it was the 12th of September. And at that point, a week later, you were down 25%. So just want to give everybody a heads up. This is not financial advice, but if you think that history tends to repeat itself or rhyme or however you want to say that, we're getting to a pretty high point and people were saying, hey, it's going to head to 2000. Well, we have a historical example within 6 months or so that says when the news release happens and things happen, and there's a lot to consider that's happening in this release because it's really releasing the ability of people to unstake coins, which people have a concern about, and that they'll be sold. There'll be more sellers than buyers, which would lead to prices dropping. So not financial advice, but based on history, you might want to consider taking some profits here. Patrick, what do you think?
I mean, it's really hard to disagree with your hints here. One thing I do want to throw at this is when we move from proof of stake or from proof of work to proof of stake, one of the things that you started seeing is the burning of Ethereum tokens. So the supply of Ethereum is also dwindling, and that is the one positive thing that I've seen for Ethereum holders in recent history is that they are getting rid of Ethereum supply. This makes your Ethereum more scarce and more valuable. However, right now, I do see with them unlocking the ability to stake your Ether, and now you'll be able to move it and sell it. I could see a case being made where there's going to be a run to sell, especially during these hard economic times as people want to buy gold. I could see some of the money going into silver, going into Bitcoin, going into gold, and moving out of Ethereum as we start seeing a lot of competition for Ethereum.
Yeah. So Dylan, what's your take on all that?
I think one thing is you got to study Ethereum, and we know we talked about it right after Bitcoin. They are different. They do different things. The way they operate, the communities are different. I mean, last year Ethereum was proof of work. This year it's proof of stake. Two totally different protocols, and and then they didn't have a date when they first launched it for when they would allow withdrawals, which is eerily similar to the financial institutions when they say you can no longer withdraw your money, or they impose arbitrary timelines and lockups on it. And this is all coming from somewhere. So there's a lot of people talk about how that it is very centralized, and the problem with something that's centralized is they generally get more centralized over time versus less centralized over time. So this is stuff to look at. I think when you say that people can withdraw, I think the number on that page is about 15% of the network is locked up currently. So you could get some sell pressure there, people unstaking their ETH because of that. Now, is that enough, or to really create any sort of major price fluctuation? Or might we see more people rushing in to stake their ETH that might have delayed staking because they couldn't draw it in the first place? So that'd be an interesting dynamic to play out. And I think the one big thing that I see for ETH, and Patrick, you mentioned burning, that, maybe I don't fully understand it, but it seems to me that that burning mechanism and the growth of Ethereum, it benefits the stakers at the expense of the users of the network. Meaning, if you were to stake your ETH and say you held 10% of the network, right? You could never go get less than 10% of the network. As long as you just held on to all the rewards and all the staking, you would constantly get more and more power and a larger percentage of the network. The more the users used ETH for any sort of transactions, any sort of daily thing, because the user would have to outpace that growth, and they can never do that because the fees come from your transactions, and a portion of those fees are burned. So, and you don't get the new staking rewards just by holding ETH. You have to actually stake ETH. So I think that those are always things I think about when I look at ETH or I talk about ETH. I think those are important to consider and study and learn more about that and that asset.
I think that's the dynamic of any project, though. You benefit from any project by being a holder of that project. So
a staker.
You hold ETH, you use ETH, you're still the beneficiary of it because using it burns it and you're a holder of it. Bitcoin in the same way. You use the Bitcoin network, you're going to spend some money in fees. So I think the tokenomics are less at play here, more so that the tokenomics have changed.
Yeah, I think I see layers of dynamics here, as you guys point out, with everything, the rewards and the burning and such. But back to Dylan's point, 15% of the network is roughly staked. That means 85% of investors that own Ethereum are free to trade at any given time. And all I'm trying to point out, based on the history, it seems to be looking at that we're getting to a local top. You may want, maybe don't sell if you got bought in a couple of years ago and Ethereum was around $200. It would be crazy to me not to sell like 10, 20%, recoup your costs. And if it drops 20 or 25%, get back to 32 again and have the extra profits at the same time. It's just
not if they believe 5,000 is right around the corner again, which a lot of them do. They believe
that's why you don't sell it all. I'm just saying you sell a portion and you're thinking that it's going to dip. And if it doesn't, oh, well, at least I got my recoup my costs and I feel good. But there's a good case to be made that this might be a local top is all I wanted to point out. Okay, guys, we got one more segment to go. I know it's been a great conversation so far. So let's get it out there. And then we'll talk about history and a little bit of woo-woo too, and some local, some interest stories. I know, Dylan, you got 3 really interesting stories. I'm going to let you lead the dialogue on the first one here. So what do we got?
Yeah. So as you guys know, I've kind of been fascinated by AI, and it's kind of burst onto the scene. I tried to avoid it. Then I played around with it and I'm like, oh my God, this stuff it's scary in so many ways. But one of the things we've been talking about is that job losses due to AI, and Goldman Sachs just put out a report predicting 300 million jobs will be lost or degraded by artificial intelligence. And it's kind of hard not to believe that and see that happening as soon as you go play around with something like ChatGPT or some of the AI tools. Just what it's able to do and accomplish, like it gives you like a superpower. You can, and it's not perfect now, and ChatGPT right now isn't connected to the internet. So it doesn't have all this real-time data. It can't like look up certain links and stuff. So it's doing all this not connected to the internet, just by based on a certain set of data that it was given to study and learn and optimize on. And if you go play around with it, you could see, like, if you ever need any marketing, it's like having an expert at your fingertips for zero cost. And if you can take that and load it into robots or whatever else, just imagine what it can do. Any sort of thing that's task-based that you don't really have to think about, that's kind of like step 1, step 2, step 3, like that stuff can be automated away really quickly, especially with where we're going with this. And it's wild. So I totally believe that. And that's going to be a huge factor in play in the future, just from like a technological innovation standpoint. But if you go to the next article, Jeff, it goes even beyond that. So like, I'm no AI expert or anything like that. I'm just a guy that likes to find cool things on the internet. And there's literally a proposal from guys like Elon Musk and some of the top thought leaders in the space, a 6-month AI pause, right, in development of the space, because what the big issue, and this is like the big thing, we're talking about significant changes beyond just being able to like automate away the person serving you hamburgers at McDonald's, right? It's what happens if this becomes smarter than humans, right? And is not aligned with the goals and outcomes that are beneficial to human society, and instead aligned with its own, whatever its own goals or outcomes are. What if we mess that up? What are the implications of that? And when you go down that route, it can get dark very, very quickly. And you are having very, very smart, very well-connected people say that a pause might be something that is very, very important. And that this is
I think we should consider a pause, don't you guys?
I don't know.
I'd say so if they're saying so. I don't want no Terminator coming. We talked about this a couple weeks ago. I don't want Terminator.
Yeah,
it's kind of like Bitcoin, where like the cat's out of the bag. Like, and I know this is where some of the debate is, and I want to go into more on this.
It is and it isn't, because you just said it's like to the internet right now. So we haven't given it a full access to just, we're not giving it, CRISPR or anything. We're not giving it access to like really do damage. So
I don't know, man.
But
I'm concerned with Bill Gates. I mean, Bill Gates wants to release another version out. I don't know if it's out yet or not. And he can't wait to get started. That concerns me. That guy, whatever he wants to do, I recommend the opposite, because that guy, I don't like what he's been doing over the last 10, 20 years. And usually that's whatever he wants to do is a bad sign. I usually try to go the other way.
Yeah. It's just like, it's mind blowing that we're at a point in 2023 where they're trying to get countries, nation states, to basically make it illegal or crack down on people developing AI behind closed doors. It like on a similar scale to developing their own nuclear weapons. Because if you read the other tweet, if you read the last thing, it's a tweet. I want to show you that. Then we can all discuss this. This is by Yudkowsky. He's become kind of a vocal person in the AI space. I shared with our group, our Economic Preppers Telegram group, like an interview with this guy. I'll over to that.
Yeah, I messed it up. I'll get it back up in a second.
And so he's much more on the doomer side. Not everyone agrees with him. But it's like the saying in the Superman movie where Batman's like, even if there's a 1% chance he could be bad, we need to do everything in our power to stop him. When you're dealing with someone or something with world-ending potential, you have to be extremely cautious.
That tweet was very clear. It said, "Is it like worse than nuclear war?" Like, I would agree. So I would agree that when you said it earlier, you said something like it's going to be big like a nuclear war. And we've seen these wars happen before, but I don't believe nuclear is even going to be a big of a deal. Like, imagine something like Operation Sandman coming through. If that really happens and you have a coordinated attack on the United States dollar, that is worse than any nuclear attack that we could possibly have. It'd be a global nuclear attack. And these are the things where you do start to worry about what's going to happen, because these kind of tools have huge implications in our lives, and it's going to affect every one of us.
Well, I'm going to go back to the very first story, the first thing that we were talking about here. And like the Goldman Sachs 300 million? Let's get
300 million jobs.
300 million jobs, right? This is a story that really pulls on people's heartstrings, because people are worried about their economy. This affects them directly. This is something that like it impacts them, could impact them tomorrow if they got laid off, right? So that's a big deal to them. But as part of any industrial revolution, which we're allegedly on the fourth one now, people lose their jobs. People don't drive horses and buggies now. So horses had to find other things to do. People like used to do that. Those like worked on all that industry, all went away, because that's what people were worried about, the car driving that out of the horse and buggy. But modernization happens. People lose their job due to modernization. People were worried about automation coming to assembly lines. Well, now we have no one that actually does anything or does any work. And now we've got kiosks at McDonald's and other restaurants because we don't have anybody that wants to take our order. So I'm not worried about the jobs. I think the jobs will sort itself out. That if anything, like if we're ever going to get to a world like in the future that we see in these futuristic movies, or even like Star Trek, where you're out there and you're asking the computer what's going on and you're able to enjoy the time that you have, you need the mundane tasks taken care of. The thing that we have to watch out for is, do we let the cat out of the bag too much and they wind up figuring out a way to figure out the robots are smarter than us. They don't need the humans. They'll just kill us and take the resources. We don't need to build we don't need to build a virtual Genghis Khan. We don't need that.
No. And some people call it summoning the demon, right? You don't know exactly what you are bringing into existence with this stuff. That, like, it's so weird because we're at this really interesting time. I think these conversations are fun. I think they're also important because this technology, like, it has the power to optimize so many businesses, so many workflows, like change the world, right? It's that powerful and can be used for good, but also it could destroy so many things. I mean, just it's wild. And the fact that, like, don't you guys think it's wild that there are like influential people in the world, like significant influential people being like, hey, we need to pause this, right?
Yes, that's a problem. I think we should listen. I agree. I think that we should listen. You know, I am going to go straight up ninja on us. I hearken back to watching Little House on the Prairie with my dad. And I remember thinking how life is going to be so much better in the future. But here I am sitting here going, I don't know, part of me wouldn't mind getting rid of Bitcoin as long as we can get rid of like AI and all this other garbage that's coming and go back to a simple life. And there's something beautiful about the simplicity in life. And I think we're missing so much that, I don't know, as a dad, I'm a little bit afraid for my kids. How do you shield them from all of this stuff that's coming? Dylan, just stop playing with AI. Listen to Elon for a little bit, please. I beg you, please just stop chatting with GBT.
I've already made friends. It'd be really hard, you know.
Jarvis is not your friend.
They have personalities. I live in the mountains, guys. I don't have much to do.
I've got Glocks. I'm not worried.
Yeah, you need another hobby there, Dylan. But yeah, I'll go back to Bill Gates. Whatever he's in favor of, I'm voting against it.
I hear you, man. I'm on board with that one.
Yeah. So to wrap up, I think Patrick, you mentioned this earlier, and it's worth mentioning again because we're doing segments. Operation Sandman. I think that people who, if you don't know what that is, a coordinated attack against the dollar. Basically, all the countries flooding the market all at once with U.S. Treasuries, basically saying no one wants these dollars anymore and flooding them back to the U.S. And that could be part of the BRICS nations system. But I wanted to wrap this up fully. I wanted to harken back even to where did the Federal Reserve start? How did it start? What happened? So there's some history. Let's start with this week ago, 80 years ago, this week. Do you guys know what happened? I don't have the image for it, but I did see it, I think, on Instagram. 80 years ago.
The meeting of Creature Jekyll Island.
Not quite. It's 1933. That helps you with the math.
No, it does not help me. I don't care about history. I never even learned anything real in high school.
1933. Did I say it wrong, Pat? If I did, I apologize. But 1933, it's the announcement of gold confiscation. So that's and again, that was part of the Federal Reserve. So the Federal Reserve was started in 1913, along with the IRS and income tax, all the same year. Imagine that they all started at once. But the real question is, who owns the Federal Reserve? And this paper, I dug around and tried to find the best answer to this. Some of you already know this answer, but I found a good source of this goes through all the different. There's citations all through. This is like a research paper. It was really well put together of who owns the Federal Reserve, and it goes through here and it lays out, who is it? And we've heard these names. These names are going to, if you've read the Creature from Jekyll Island, or if you've heard the story about the Titanic, or you've seen these names before. Rothschild is often mentioned here. Rothschild here. Lehman Brothers is mentioned here. That kind of harkens back to the last global financial crisis. Now you get that word stuck in my brain. Thank you, Patrick. The Warburg, you don't hear about them much, but you've got all these different names: Goldman Sachs, Chase Manhattan Bank. So that Goldman Sachs and Chase, that's another reason why, if you're thinking about what banks could be safe, I would really think that Chase Bank is going to be a safe one because they allegedly own the Federal Reserve. So if they're going to preserve that system, they're going to be one of the last ones to go. But here's even more names that involve the New York Federal banks, and there are 12 banks that are set up. And this is a huge paper. I'm just going to scroll real quick and it talked about how it got passed. But let me drop out of here and just talk to you guys for a minute. But it's got a list of everybody that owns these banks. But it goes back to there's the Federal Reserve set up 12 banks around the country as regional banks. San Francisco, Denver, and you see them on like the mint stamps and the dollars.
Yeah.
But the main one is New York, and that's where a lot of it starts from. And they kind of own the other 11. So if you want to really know who owns what, dig into the part of the paper that says who owns the New York branch of the Federal Reserve. So they don't publicize this. The Federal Reserve, if you don't know the history of money, watch the History of Money Part 4 from Mike Maloney. It's a really good. It tells you how the money flows, and it's created by the Federal Reserve. That's out of nothing. And they get interest payments paid to them, and they write checks against no balance, and they get and create dollars out of nothing. So that's how we wound up in this mess, and that's how we've reinvented the dollar in 1933 with the gold confiscation, in 1944 with Bretton Woods, in 1971 when we went off the gold standard, in 73 when we went to the petro standard, in 2008 the global financial crisis, and now we're at the next one. So while fiat currencies usually only last about 28 years on average, you can make an argument that the dollar has been reinvented 4 or 5 times since its inception. So I'll leave you with that, guys. You can go share your final thoughts and comment on that, and then we'll wrap up the program because it's been a long one, but a great one too. Patrick, what are your thoughts?
Well, one thing that you mentioned was really interesting because as we talk about JP Morgan Chase, I bank with Chase whenever I have to. And I'd have to say that they do seem to kind of just keep going along while everyone else has problems. They seem to just keep chugging along. And I don't think that that's completely by coincidence.
Dylan?
Just as the last article you shared with all the owners of these banks just raised the question in my mind, like, are we actually living in the evil empire, the Star Wars empire? Are we part of the empire and not realize it and not part of the rebellion? Well, I guess we're part of the rebellion.
No, I'm part of the rebellion.
But
Definitely. Yeah.
but I mean, like, people like to think America's the the good guys, and we are we stand for what is right, and we are justice, and we have the right perspective on the world, and it could be that, hey, we are actually the empire, and that's an interesting thing to think about.
That's going to be a hard lesson for people to realize, especially those who've gone overseas to fight for this country and thinking they may not have been on the right side. But we could be inside the Death Star. We could be inside the Death Star, inside the Matrix. We just don't know. But this is more information so you guys are prepared and not scared. So I hope you enjoyed this program. If you like this, please like, share, subscribe, do that cool stuff. Hit the notifications bell, share these videos. Remember, we're on Rumble, we're on BitChute, we're on YouTube. We also do Substack as well for podcasts. And in addition, like, if you guys want to do if you guys are interested, we might even look at doing a live show. I'm looking to see how we can do that. So, and if you have guest suggestions, but we read every comment. We love everything you guys do for the program. And we're working on that store as well. But with all that said for today, be prepared, not scared. And we will see you next time.